Welcome to the Let's Talk Crypto podcast, where we discuss the latest Bitcoin, blockchain, and digital asset news.
Hey everybody, hope you're all well. I'm your host, Wes Carlson. This is episode 21 of the Let's Talk Crypto podcast, recorded on the 16th of August 2019. This is chapter 3 of the Crypto Market Wizard series, a series of interviews with traders in the Bitcoin and crypto space. Some of them may be more familiar than others, but they all share a common passion and skill for trading. I keep things informal and lighthearted, but do try to get some insight into how they got started and what they think makes a successful trader. Today, I have Crypto Michaël. Michael trades Bitcoin and altcoins and often posts his analysis on Twitter. He depends on pure price action to determine his entries and believes one of the most important things to have as a trader is discipline. Let's talk to the man himself. Michael, welcome to Let's Talk Crypto, Market Crypto Wizards, and let's get started. Where are you from?
Well, first of all, thank you for having me. I'm based in Amsterdam, the Netherlands, working at the Amsterdam Stock Exchange as a crypto trader, and a big fan of Ajax, so that's where I'm at.
Cool. I know you're a fan of Ajax. I see you posting up-to-date commentary basically on every match on Twitter. I haven't read
that. Just be a little bit more professional with my crypto trading stuff. So I just moved to Instagram.
Okay. And how long have you been into crypto? When did you start?
I've started trading. Well, I started doing some stuff in crypto during the first quarter of 2017.
Okay.
When the altcoin bubble and stuff just started to happen. Yeah. And along the way, I got more interested in it. Basically also because I'm studying economics. And that just made a nice connection between what I'm thinking about the current market in the way of our economy and what Bitcoin could be or crypto could be. So I joined it along the way and I found trading pretty interesting. And now I'm addicted to it.
So you discovered crypto first and then trading, or was it trading first and then crypto?
First it was just randomly buying some coins. Started with just buying coins that were cheap, like Ripple, Verge, Digibyte, the standard way. Okay. And along the way it became full trading. And right now I'm shifting more to understanding the macro view of our economy and in what way we could use Bitcoin and in what way it could actually connect in our current economy. So like we are using Bitcoin, but when are our parents going to use it and that kind of stuff? When do we actually use it?
Yeah, when will it actually go mainstream and not just some guys playing trades and some guys in a basement somewhere, cryptographers? Yeah,
that's probably the big question we should ask ourselves. When do people actually need a cryptocurrency or want to use a cryptocurrency? I guess the point of starting to use a crypto is basically when there's no trust in our current economy anymore, which might actually already decrease right now with the current movements of the market, with the trade war, with negative interest rates, with markets slowing down. So it could happen that in a few years people actually find Bitcoin safer than their current currency.
Yeah, it's certainly looking like there's a lot stacking in favor of Bitcoin and cryptocurrency at the moment. If we remember that Bitcoin was originally started, when we had the banking crisis in 2009 and they were getting bailouts and that, we certainly look like we are approaching a similar time in history as to what we experienced back in 2009. So,
well, fun part is we had a documentary here with one of the big guys who were actually in the government during that period, Minister of Finance, and he stated that we didn't solve the 2008 credit crisis. We solved it with more debt. So actually, the crisis we had back then is not solved. It just became bigger.
Yeah, we basically took a big container of gasoline and emptied it out on the fire, hoping to put the fire out.
Yeah, well, that's what you see right now. I mean, there are trillions of dollars in debt right now in the United States alone. I saw it reached all-time high back again, even higher than 2008. And even on a mortgage, you can get negative interest rates. So they pay you, so you get a mortgage. Well, I can tell you that's not how it should be working.
Definitely not. People have been, shouting about this and yelling about it for years in the Bitcoin space. Anybody who's sort of grasped how Bitcoin was started, why it exists, and what problems it aims to solve, understands that this is exactly the reason why Bitcoin was started.
Yeah. And now it's forming. All the problems are just getting there so we can actually adapt to a different monetary system maybe. You can also look at it on a different way. Like if shit hits the fan and the market goes down, like the equity market goes down, normally what will happen is that people shift to like commodities, so gold, silver, whatever. The only problem with shifting to commodities and when there's a real crisis is that the government can confiscate the gold you have. So by actually buying Bitcoin, they cannot do that.
True.
So it might be even safer.
Yeah, in that sense, yes. Being unconfiscatable or very difficult to confiscate, it certainly beats gold out on that property. In terms of your trading, give me a little bit of background on how you learned how to trade and sort of did you have a mentor? Did you research yourself?
Well, first I've started like everybody was doing it, just following the big guys on Twitter, how they were doing their calls. And during 2017, it was all about Elliott waves. Everybody doing these stupid Elliott waves. So I started using that as well when I started to trade myself. And along the way, you just figure out that using Elliott waves or using indicators is mostly just noise. And you'd rather just want to use pure price action as the basis of what you want to trade, and patience. So what I also found out that I was studying still till last month, and the combination of trading and studying is just not working out. So if you want to trade, you should be focused on the trading alone and just be relaxed and mentally stable. Otherwise, it will go the wrong way. And it's about experience, basically.
Yeah, I think, the best way to learn in trading is to actually have skin in the game and actually learn from getting things right and getting things wrong. There's no easy way around it, really. There's a lot of knowledge out there, though. And as you say, one can get distracted by all the fancy indicators and different strategies out there when it can really be as simple as price, volume, and time and price action, basically, of that.
Yeah, trading is not, to be honest, not that difficult. It's more about your mental state, actually. So are you capable of keeping your trade running when it goes up? Are you capable of actually following your discipline and your risk management of cutting the trade when it goes the other way around? These factors are even more important than just doing TA, because TA is just a small part. And when you look at the TA, when you use Bollinger Bands, Ishimoku clouds, moving averages, that's not suitable for me. It's just noise, and it just doesn't give me a proper view of the chart, because every indicator is changing the way you look at the chart. So I'd rather I've cut it all and just using pure price action and indeed volume. Sometimes I use the RSI for divergence. But like, that's my strategy. There are many other strategies. If you're profitable, then that's fine.
Yeah, I think everybody's different. And I tend to agree with you. The less cluttered a chart is, the less distracted you can be, and you can actually see what is happening. Candlesticks in themselves can tell you a lot. Just a few candlesticks on a chart can tell you a lot about what's happening with the psychology of the market. And I couldn't agree with you more that risk management and the psychological side of trading is the most important, in my opinion, and as it is with you. You can have the best technical analysis and best strategies and best techniques, everything related to indicators and all sorts of fancy bells and whistles. But when it comes to actually putting on the trade and taking off the trade or keeping the trade on, managing the risk, the stop losses, the take profit, I think that is the most challenging part. Your mind can play tricks on you. And when you're in a trade, sometimes you can't think clearly. Not in the same way that you can before you've put on the trade.
Yeah, I do agree with that, to be honest. I used to watch charts on other people on Twitter as well and groups, but most of the time I'm constantly just thinking like, okay, so you have built this chart right now, and how are you going to trade this? Because this time you're using like pure price action, but on the other chart you're using Elliott waves, and then you are using Shimoku clouds. It's not working well. Then you don't understand what's going on in the chart. And if you just zoom out and just use pure PA, you can see, okay, the trend is upwards. If it bounces here back up, we got another support resistance flip, and then we just go on. In that way, it's way easier and just calm and relaxing to handle with trading. I mean, if you don't have any clue what's going on in the chart with all this stuff you're using, then you get all these tricks in your mind. But if you have a solid plan with, I'm going to enter it here, and if it drops below that level, it's invalidation, so then I'm out and just going to wait. That's just strict, easy to work with, and not much can go wrong. Okay, yeah, you can lose money, but there's your risk management for.
Yeah, risk management is what will save you at the end of the day. As long as you stick to the rules that you've put in place for that risk management. If you've got a stop loss and you don't actually let it trigger and you move it or remove it, you may get it right once or twice, but in the long run, statistically speaking, you're probably going to lose. So, yeah. I mean, everybody goes through sort of like this tunnel, right? I think, where you're learning and you're trying to actually learn on the job almost when you're trading. So you constantly feel like you're learning in the beginning. And I suppose until you find your niche style or your niche way of trading, and you've got your risk management down. And along the way, you like you said, maybe in 2017, somebody was doing Elliott waves, and then maybe they were going on to moving averages or something else. And, the next hot thing that comes out, whether it's Ichimoku or, hopping around and almost not finding success. So moving to another indicator or another strategy. And I think a lot of people go through that sort of tunnel of discovery until they actually find what they're comfortable with. And often it's just going to be straight up price action, like you said, and realize that it's more the mind they have to manage, the psychology and the risk management. And you could probably take just about any strategy and make it successful as long as you've got good risk management.
Yeah, well, I firmly do believe that if you want to trade, you first have to understand, or at least try to understand, how the market is working. So
yes.
At which point are we right now? At which point is, for example, the equity market? When is there a trend shift? Or understanding the market on a macro view will actually understand your trading when you're zooming in. So first you have to understand the chart based on a daily time frame or a weekly time frame, and then you can start zooming in. I see many people who want to start trading and they're like, oh yeah, I can make 20-30% on a day or whatever when they zoom in, and then they find out, oh yeah, it's even harder when I zoom in than I zoom out because your risk is way higher. And what I mean by that is that if you zoom in, you just don't have a clear view or picture of what is going on in the chart. So there can be an upside trend inside like the 15-minute chart, but if you zoom out, it can be just a downtrend. So that could actually increase your risk if you're playing a longer game.
Yes, and I would say in the cryptocurrency space, from what I've noticed, there's a lot more of that. A new trader will come on and they will go straight to like the 5 minutes or the 15-minute chart and assume that because they're trading the 15-minute chart, they can take more trades, and because they can take more trades, they can make more money because they don't have patience.
Yeah, that's the wrong way of thinking.
Totally, yeah. In fact, the less you trade, probably the better.
Yep, definitely. And Also, when you start trading, have a trading logbook, in which way you can just write down which trades you have been doing. And then once every 2 weeks or once a month, you just take one day to just check and evaluate what you have been doing and why you were wrong on the trades you were wrong and why you were right on the trades you were right. In that way, you're building a system and a structure for yourself, because trading is essentially just having a strategy and rinse and repeat over and over again.
In fact, if you do it correctly, it should be incredibly boring because you're just repeating the same thing over and over again, I presume.
Yep. And that's not making it funny to do, but it makes it funny to do when you're profitable, because then you make money and you experience the freedom you want to have without the stress. Because everybody has that sort of dream and fantasy that if you're a trader, you're living the actual freedom and you're a sort of wolf of Wall Street. And
that's true.
That's not the case until you've built your own system and you're profitable for a few years. And even if you do it for a few years and you're profitable, the market can shift and all of a sudden you lose everything. So the discipline and the boring lifestyle is actually what suits the trading style.
Yeah, I think it is very tempting or very easy to fall into the category of the person who's looking for excitement. And it's almost like a gambler's mentality if you think about it. They put the coin in the slot machine and see what happens, and put another one in and another one and another one. Instead of looking for consistent results, repetitive, something that you can replicate over and over again, and mindful of the fact that you won't win every single trade, but you've got a statistical edge. So you might not win 20 out of 20, but you're going to win more than you lose, or at least you're going to cut your losers and let your winners ride. And in a sense that you've still got that edge, even if you just have 1% more, you're ahead. And I think that's quite an easy trap for people to fall into when they start trading, myself included. I definitely fell into that trap initially, where I would enter a trade and it would be a winning trade, and it was much easier to set a stop loss than it is to set a take profit. And you just think this thing's going to go forever, and the thing turns around. Not only does it turn around, it goes past your entry point and you're still holding this thing because you've removed your stop loss.
That's standard mistakes of like people who start trading. But like from my own experience, it's also when I started trading and the trade was a winner, it felt almost like I was on drugs, because the adrenaline and this stuff. And then you're all of a sudden with, it's going up, and where is the resistance right now? Where am I going to cut it? And then you take profit and the coin obviously just goes upwards again. Yes. And then you enter it again and then it drops down and you're out break even or at a loss. So what I discovered in doing that is that even if the coin moves up even more, I don't care. If I make profit, fine, done. Just take it, move to the next one. And even if it goes up, if it goes back down after the move up and it flips the level, I'll just re-enter again with a tight stop loss. Just cut the emotions. That's basically.
How would you describe your trading style? Obviously you've got risk management principles in place. It sounds like you base your decisions mainly on higher time frames. Maybe you zoom in a little bit, maybe to the 4 hour, I presume, or maybe even 1 hour sometimes, just for an entry.
Mm-hmm.
Do you swing trade, trend, scalp? Do you do only one of them? Mixture depending on opportunity or asset?
I do swing trade and day trade. I'd rather just say these two, because scalp trading on like the 15-minute charts is okay-ish to do, but I've got some other stuff I'm working on right now as well, and combined with studying, it's quite hard to do so. Yes. But for instance, with coins like Dusk or Link the past few weeks, then you're trading on the 1 hour and sometimes the 30 minutes, so that's more day trading. And the bigger waves are on Bitcoin you want to really have, and that's swing trading / I'd say investing sometimes, because it just takes months on some trades.
Mm-hmm.
So you have both of these. I'm not that type of dude who wants to play with 10 times leverage on a scalp trade, because then I go mental.
No, definitely. And I think a lot of the cryptos, but especially Bitcoin, I don't have too much experience with all the other ones, maybe a little bit of Ethereum and some of the higher cap ones, but let's say Bitcoin, there are some nice trending trades to be taken if you watch the higher timeframes and you get, even if you just get 60% of a move, some of them can be really, really profitable.
With Bitcoin during the past month, it was quite natural in the movements.
Yes.
So the whole move from 40, after the move to 14K, the bounces were just on beautiful levels and pretty standard to trade, to be honest.
Does seem to follow quite easy to identify levels, and whereas if you look at something like Forex and that, it can be quite tricky, and you're better off zooming in and obviously looking at the trend on the higher time frame, but zooming in and doing short trades in and out. It's a lot more difficult, in my opinion, than trading like Bitcoin, for example. Tell me something, Michael. How did you start your trading in terms of like how did you fund an account?
Just my own money. During 2017, it was well, probably you've been on the market back then as well.
Yeah,
it was crazy to just put money in a coin. It went up. So I built my account by just randomness during that period. And decided to go full-time in trading during December 2017, obviously.
Yeah.
And I funded myself by then. And you have to figure out that if you want to make a certain amount of money in the month, then in crypto and the volatility we have, you don't have to have like 100K to make a living out of it. So it's not that you need a very big balance to live from trading. So I just fund myself, and that's okay right now. Besides that, I'm also people.
I mean, as you said, initially in 2017, it would have been a lot easier. I mean, you really didn't have to be a rocket scientist to pick some coins, and they would probably all go up. I mean, let's be fair, the whole market went parabolic. So there must have been a stage when there's a turning point where you felt that you weren't being successful. You know, you had to actually now perhaps put a bit more effort in and really buckle down and sort of think about what you're doing, in a sense. Not that you weren't before, but I mean, it must have got a bit more difficult, surely, right?
Yeah. The whole 2018 period and year was just a big life lesson for me.
Yeah.
With the market going down and just learning to understand how a market moves. That's something that I really see right now as being useful, and why my trading got to the next level. So it's fine that 2017 was great and that I made money, and then I lost again a big portion in 2018. But the lessons I've learned out of that
priceless.
That's priceless. You don't get that on a different market. You don't get that on an equity market. It will probably take like 6-7 years to have a full cycle. Yeah,
it's true. It's compressed in crypto land. I mean, we've had like a bear and a bull market in like 18 months, you know?
Yep. But it will go slower in the future. It's because we are just such a small, tiny market still.
Volatile.
That makes it volatile, but over time we probably settle down a lot. And then Bitcoin will move like gold when it takes like 10 years until making new all-time high, which is fine. And the small coins will still stay around, obvious. But yeah, it's the past 2 years has been probably for the majority of us a big lesson.
Was there a turning point though when it went from 2017, which was a lot easier, and into 2018, which was a big learning curve for a lot of people, and experiencing what a real bear market is for the first time? Was there a turning point going from that to being consistently profitable, to being able to, I presume, earn a living out of trading crypto? Pure trading, not just the profit of a coin going up on its own, by holding it?
Well, I have to say that the trading has become better during the past 6-7 months, I'd say. So we had the big drop down in 2018 during the winter from like 6K to 3K. And that was the point for me that I'd say, okay, well, I'm just playing around right now and not still following the discipline and risk management I want to use. So then from here on, I'm going to build, I'm going to do it. And if I can't accomplish being profitable in the next 2 years, then I'll just quit it. So yeah, I'm really disciplined right now and using the logbook and using everything I can to just improve. And I see my game getting better. The trades are getting better as well. So yeah, I think I'm improving, and hopefully I will stay doing that during the whole bull market, because I believe we are in one.
Yeah. You do believe we're in a bull market now?
Yeah, definitely. And there's still the hyperwave echo bubble thingy going on.
Yeah.
But honestly, I don't believe that we're going to hit 1K. The only way we should be going down that much is when there's a different coin all of a sudden, which is better than Bitcoin, or a black swan event.
Yeah.
But I doubt it. I mean, we are just moving around as gold right now, so actually it's becoming a hedge, I feel like. We've discussed that during the beginning of this podcast. So yeah, I do believe that we're in the bull market, and we are getting close to the bottom on the altcoin market as well. I feel like so.
Yeah, 1K would destroy the souls of everybody involved in Bitcoin, I think.
Yeah, then
myself included. And I think we're so far from that happening. You know, let's rather talk about us breaking 9K, you know, or 8K at worst. 1K just...
Yeah, I do believe that. I don't know if you saw some of my tweets, but I believe that we are actually... Many people are comparing the last parabolic move to the 2017 parabolic move. However, I don't believe that we are in the same phase with this market cycle. So I'd rather just compare this period to the beginning of the first bull cycle, which was during the end of 2015, beginning 2016. And what you see there is that during that period, there was a certain amount of time that we just went sideways to find a new floor, consolidate, before we started to move back up to just before the halving. So what I'm expecting right now is that we just go sideways for a while, maybe touch 8.5K. I do believe that we go down that way before we just grind upwards, and then the altcoins will start outperforming Bitcoin.
Why do you think that the altcoins at that particular point would start outperforming Bitcoin? Is that just due to past?
Yeah, if you go back in time, and there are there is data on the past alt seasons. For instance, if you check Dogecoin,
yes,
every alt season there are some signals that this one is turning around, and that's basically the start of an alt season. What you see right now is that if you compare the Doji chart with the dominance charts and stuff, you can see that every time, the beginning of 2016, beginning of 2017, the same signals were there. So divergence, support levels, sentiment indicator as well. As you can see that if you tweet about an altcoin right now, which is not going up, so like if you talk about Stratis or Komodo or VeChain, tokens that are producing or releasing a ton of stuff but still go down, they just get smashed to the floor. So the sentiment is really bearish. For instance, VeChain has been making partnerships past period and some other stuff, and it just gets smashed down the hill, which is weird because there's bullish news and the price is still going down. So I feel like that currently we can see is that we are probably at the end of the altcoin cycle, and just whales pushing the price down to fill their own bags before the altcoins start outperforming Bitcoin.
Do you think from a sort of psychological point of view or fundamental perspective, you know, what is happening there? Do you think everybody's in Bitcoin, so they're trying to ride the Bitcoin ship, and then when the rocket fuel runs out there, they all jump back into the altcoins and that rocket ship takes off? Man on the street sort of perspective, do you think that's what's happening? Or do you actually think there are some big market movers who push Bitcoin up and then they're loading up their bags on the altcoins?
Well, I do feel that the retail investors are not going to make the altcoins move. They are the buyers that when the coin moves, they'll just buy in. So the big players are the ones that will make the altcoins move. And what we feel right now is that Bitcoin is in a period of time that there's not much to be discussed about. So we had the Libra thing that actually pushed the price, they say. And the halving is coming up still 9-10 months from here. And the easiest way to make more Bitcoin, which Will's want to do, is to play with altcoins. So it's definitely a scenario that the altcoins are being pushed down right now to just fill the bags and then they'll just shoot it off. That's a scenario that I'm considering right now, because it's such a weird thing that altcoins are still being pushed down while there is good news. And we've seen the same with Bitcoin. There was good news and the price was still being pushed down. And we see what happened afterwards.
It reminds me of 2018. There was lots of good news about Bitcoin and it still would go down.
That's how a market works. Right now we're in a phase with altcoins that there's bullish news on the coin, but the coin doesn't move. And we've been through that period with Bitcoin during the end of 2018, just before the big drop down. And also during that period that we were hanging at like 3.5K. There was so many fundamental good news about Bitcoin, but the price wasn't moving until all of a sudden it started to move. And then you get like the snowball effect that everybody wants to buy in, which you've seen with Link as well.
Something like BNB coin, what do you think of that? I mean, I had somebody on last week, I think his name is Teddy Clips, and he was saying that he finds there's an inverse correlation at times with Binance Coin and Bitcoin.
Not particularly like that, but do feel that during 2017, Ethereum was the signal of an altcoin season, or the signal that altcoins were going up. I do feel like that during the coming period, BNB is going to be that big indicator. So when BNB is going up, altcoins will start moving up as well. I kind of feel like that BNB has taken that role.
Yeah, that's a good point. In fact, it was Ethereum and Dash. They both just went absolutely parabolic long before Bitcoin did.
Right now, you can see it with BNB and all these EAOs and the new tokens they list from the DEX to the central exchange. When BNB moves up, most definitely all the EAOs are also moving upwards. So both BNB and Ethereum are indicators in my opinion.
Yeah. And Ethereum's got its change over to proof of stake or in hard fork or something coming up, I think beginning of next year. So that'll also be very interesting to see how the market reacts to that. You'll probably find there'll be a bit of bullishness going into that event and might become a buy the rumor, sell the news. But everybody knows this thing's coming up. So it'd be very interesting to see how it plays out. It's kind of like the halving in a way. I remember the 16 halving?
Mm-hmm. Yep, during the summer of 2016.
Yeah, and I was so excited about it. And leading into it, the price did go up, but much closer to the time, it actually dropped. It dropped into the halving.
Yeah, well, that's you've got the buy the rumor, sell the news concept on these things. So what you mostly see happening is that when there's an event in like 5 or 6 months from now, the price starts to move up a few months before the event. However, the actual top is not at the exact time of the event, but weeks before. And so with Litecoin, we have seen that the price topped out a month before the halving. With Bitcoin, we've seen in the previous cycle that the top was a month before the actual halving event took place. So that's an interesting concept, in which way we should see a new top on Bitcoin during, I guess, March, beginning of April next year, just before the halving. However, if we flip that and we consider the Binance US ban, we could also say that people are selling their altcoins right now because they are expecting that the altcoins will go down even more because US customers can't use the site anymore, which is just negative news, which is the other way around of the positive one with the halving. So we could expect that right now, 3 or 4 weeks before the actual event, altcoins should have bottomed out and will start move upwards.
True.
Which is the psychology thing in this whole concept. Still has to prove.
Tell me something. Do you trade with leverage?
No, I don't trade with leverage. I did trade some Forex, and then you have to use leverage. If you're suitable with doing that, that's fine. But like 95% of the market shouldn't be doing leverage in a market which can move like 10 or 50% on a day.
Yeah, leverage comes in handy, I suppose, when you actually know how to use it properly in terms of hedging. If you use futures and options. In terms of a lot of the cryptos, though, would you trade them on a particular exchange or multiple exchanges?
Well, I've been sticking to the mainly the coins on Binance, because the reason for that is sometimes you can shift to different exchanges as well. However, it's really hard to trade coins that just pump and dump around. So you've just got a small portion of the market which you can trade, which have natural price action. And if a coin has natural price action like Bitcoin does or Dusk does right now, or coins like Matic when it went up, then you can trade it on a nice way because there's also volume and liquidity and natural organic movement. When there's on a different exchange, coin pumps out of nowhere because of no liquidity and just a random will buying it, it's quite hard to trade it with my strategy. So I'm sticking to the good old Binance.
If you're not using any leverage, when you buy Bitcoin, you're just buying it straight out, 1-to-1. And do you find yourself, I mean, we're in a bull market now, so I presume you're buying dips. Are you selling when you see a medium-term reversals?
Yeah, well, Bitcoin, I sometimes do a low amount of leverage because sometimes when I see an obvious trade, but it's just for Bitcoin, I'm buying and selling it on Binance. When I see a point that it should turn around, I'll just sell to Tether. Sometimes I might open a short, low leverage on BitMEX. I just stay away from the high leverage amounts because of the overload system bullshit there is on the BitMEX thing. It's just too hard to trade. So yeah, the thing is that I don't need. People are greedy, so when you use leverage, people want to make more and more and more and more. What I try to do is just make a certain amount of money every month, just grow with my account and just compound all the profits. And that's way more relaxing. I try to just do this game for the coming 30, 40 years and not for the coming 5 years.
Or even shorter.
Or even shorter, yeah. Well, if there's a bull market coming up and Bitcoin hits 150K, I'm sure I won't trade for the coming 40 years.
That's the thing. In a Bitcoin bull market, you really don't have to do too many trades. You know, you can just keep buying, adding to your position really on dips, and you'll do pretty well if it really is a parabolic, bull market like we've had in the past, and Bitcoin goes to some of these crazy numbers. There's no point in trying to trade both ways and trade against the macro trend. You end up getting chopped up and losing your Bitcoin stash. If you had to boil it down to 3 important things, pieces of advice you could give to like a new trader, maybe you've mentioned some of them already, but if you could just boil it down to 3 things to somebody starting out, what would those 3 things be?
I'd say everything comes down to discipline. So that's actually the key word, which means discipline is involved in being patient. Discipline is involved in having your emotions under control and sticking to your strategy. And when it comes to just TA, I advise everybody to not listen to too many people and just stick to pure price action. Try to understand support resistance levels and order blocks and trends, and then you are already 90% ahead of the market. But yeah, basically it's just discipline.
I think with discipline that, like you said, it will filter down into everything else. Sticking to reasonable position sizes, low leverage to no leverage, depending on the person's risk appetite, but discipline in terms of not over trading. I think you mean that too, and in all aspects of trading. That's
literally like every aspect of trading, discipline is involved. So it's also involved in the way of your lifestyle. When I was part of a union, a student association, and I traded, that was not working out really well because of the drinking part and just the partying part. Right now I've skipped that and just working out 6 days a week with just a standard ritual every day. And that's keeping my mind fresh and just relaxed and stable. And that's also part of the discipline, which is actually a boring lifestyle, but it's working out to become a better trader. And if you want to party for like 3 or 4 weeks, okay, that's fine. But then I'm not going to be locked in on my Binance account. So yeah, everything comes down to that word, I'd say.
Next question, more in terms of current Bitcoin price. We've just closed a weekly slightly higher in price action than the previous local top. And I see you make the case there for divergence in RSI, lower high in RSI, higher high in price action. You make a case that we could be seeing a couple of weeks of downside from here?
Yeah, I don't know for sure if it's all coming down to, can we flip that 10.9K level again as support or not? it's quite important to see how we react in there. If we don't even get close to that level or flip it resistance, I'd say we go down for a little bit more. But I still believe that this is just a natural correction of an upwards trending market, with my lowest point of being 8.5K of being the bottom. And after that, we probably see a boring market with Bitcoin going sideways for a while or just ranging.
A big accumulation period.
Yeah, which is not a bad thing. It's natural in the market.
Yeah, we've come up here very quickly. The move from 3,200 up to nearly 14K, in the matter of 4-5 months, there's been quite a parabolic move. So yeah, to grind it out a little bit and have a bit of an accumulation period would not be unusual or bad or break the structure of the market.
No, I really love to see some period of just being calm and finding a new floor. And probably what you will see is that if Bitcoin decides to go below the 5 numbers, people will start being bearish as hell and will call for the 6K levels again. While I don't believe we will go that deep. If we go back to 6K, I'd say it's a really bad sign for the market, as I feel like that there's a ton of people who still wants to buy back into Bitcoin. So based on that perspective, I'd say that we find the floor pretty fast. And maybe if we go down to 8.5K, it will be just a spark and just within a few hours we're back up. But even if we go back down to that level, that's a very healthy state for the market.
Were you surprised at the rate that we came up?
I thought actually, which was my mistake back then, that we might even would see 2.5K. Yeah. But after that break of 4.5K, it went really, really fast. And I was expecting that at 6K, we wouldn't get that beautiful short everybody wanted to. So either way, we wouldn't hit 6K or we would just smash through it. Well, the last one happened with all the open shorts back then. But no, I was not expecting to see 14K all of a sudden.
Yeah, myself included.
I guess nobody
myself
did.
included. I wasn't expecting us to go all the way up to 14K. Not at all.
I was expecting that 11K level to just be the resistance, which actually is the resistance at the weekly time frame. But that wick to 14K was just brutal.
Absolutely. I honestly thought we'd just get a little bit over 10K just to, as a bit of a bull trap, rope in all the buyers there. I thought that FOMO wick that we had at 14K was going to be at just over 10K, like you say, maybe up to 11K. And, everybody buys in the last gasp of the parabolic move. And I thought we would come back. And I thought we would come at that stage. It was more reasonable if that was going to be the parabolic wick at the top. In my mind, it was reasonable for us to come back and test like high sixes, 6.8 around there, 6.8 to 7.7, around that area. But yeah, it went all the way up to 14K. That's Bitcoin.
I doubt we will see 6K back again. I seriously doubt it, because the point is that like 6.8K and 7.5K are just levels that everybody wants to long or just wants to have. And I don't think that a bullish market will give you that opportunity.
No, and I agree with you. Not after where we've come to. Yeah, not the way we've come there. And we have built up some good sideways action below us. We have got support. There is healthy buying and we've built up a bit of structure below us. So for us to plow straight through would need, something really cataclysmically wrong, or a black swan event, as you said.
That I don't know from which side that should be coming. Well, that's also the case why it's a black swan, right? Given that the economy is not being that strong right now and the way of Bitcoin moving alongside with it, I would doubt that we will see like 6K or 6.8K. I'd rather think that the market will go upwards during the coming year, 2 years, even more, based on the fundamental view on the economy and just how the cycles work, rather than we are going back down again, which some people are expecting. But that would be very strange.
Yeah. Well, I mean, with that many people wanting to buy back in, it will get front run. So could get front run, and end up somewhere in the 8s or 9, somewhere around where you were talking about 8.5, 9,000. And that's just a symptom of a very strong market. People not wanting to miss their entry. So everybody's front running the next guy.
Yeah. And I do believe that if Bitcoin bottoms out in the next weeks, in case we do, then the standard shifts from USD being the safe haven and Bitcoin becoming it again. So people are more safe in trading altcoins as well.
That's a good point because, I mean, if you think about it, like throughout 2018, you really were trying to, if one was trading, your mindset was, okay, let's try and accumulate USD so that I can buy more Bitcoin when it bottoms out. And people feel a lot more safe once it finds a bottom now and then enters the next phase in holding BTC and putting it on cold storage, or like you say, then moving into the altcoins and trading against that to accumulate again more Bitcoin, I presume.
Yeah, I do believe that market shift has to come still, and we are getting pretty close to it. Especially what we see in the past week is that Bitcoin, or like past 48 hours, is that Bitcoin dropped down and the US dollar levels of these altcoins are just relatively stable, which means that the Bitcoin pairs are bouncing back upwards, which is new. We didn't see much of that happening. I do feel that we are close to a market shift in which Bitcoin is the safe haven again. And we're just trading altcoins to accumulate more Bitcoin until Bitcoin makes a parabolic move back again.
Okay. Well, coming close to the end now, and I ask everybody this question. It's just for mental gymnastics. Nobody really knows where Bitcoin price will be in the future. But there's a lot of crazy numbers that are thrown around, and it's just for fun in terms of what Bitcoin could get up to. What do you think would be a reasonable price if you had to take a guess for the end of 2020? What would the reasonable price be for Bitcoin?
I guess we are ranging around end of 2020, like 30, 40K. That area.
Yeah, remember so we've passed the Bitcoin halving, we've passed the sell the news, and we start trading.
Yeah, I do think that we are going to make a new all-time high just before the halving, and just drop down and do another period of calm after the halving. So I'd say the actual parabolic will start during 2021. So then I'd say 30, 40 grand, something like that during the end of 2020.
Wow. Okay.
But I'd love to be wrong.
Yeah, I mean, who really knows? I mean, I'd love it if you're wrong and we had $1 million.
Well, if we are at $1 million, then our whole economy is just bankrupt.
Exactly. What's the dollar really worth if Bitcoin's worth $1 million? You won't be measuring Bitcoins in dollars anymore.
No, then we're in a different market and world. So let's hope that doesn't happen.
Yeah, we don't, as much as we like Bitcoin and crypto and that, we don't need that to happen because I think there'll be a lot of pain and suffering for everybody.
Yeah, definitely. The crisis is not fun for nobody.
Exactly.
So if all these people who are calling for Bitcoin becoming $1 million should realize that if it hits $1 million, then our whole ecosystem is so different.
Yeah.
And the nature of the world is so more aggressive and different as well.
And it would be a big transition phase. It wouldn't be orderly. It'd be quite messy.
Yeah, it's just an instant shift.
Yeah.
Which hurts a lot of people.
Yeah, exactly. All right, man. Well, do you want to give a shout out to how people can get in contact with you, follow you, give your Twitter handle? And I know you've got groups, trading groups and things like that, that people can read.
Yeah, if you want to follow me, you can find me on Twitter, which is at Crypto Michaël, or Crypto Michaël, whatever you prefer. And if you check my pinned tweet, there's a Discord channel as well, which I'm going to use more during the coming period. And that's still the only channels that I'm using right now.
What can you tell us a bit more about your Discord channel?
Yeah, I want to use it as twice a week that I'm going to write updates about like 5 coins.
Okay.
Full like 3 or 4 pages with my view on the market.
Okay.
Rather than just posting tweets with like 200 characters. So I'm to do that and build a nice community over there, making ourselves ready for the bull market.
Awesome. I think I'll come have a look at your Discord. That'll be cool.
Yeah, it's pretty quiet right now, but I'm going to build it. Cool. And I'm coming back to YouTube during October.
Okay. Did you already have a YouTube channel?
Yeah, I did during last year.
Okay.
Until the summer or so. And I really want to get back to that platform to just discuss trading charts and learning everything for people.
Oh, that'll be awesome. Okay, well, I look forward to that. Michael, thank you so much for joining me on the podcast, the Crypto Market Wizard series. It's been a blast. Very interesting to hear your take on things and the way you experience the bull and bear market. And yeah, I'll be following, and hopefully we talk again soon, man.
Thank you, man. Thank you for having me on the show, and all the best with that. And all the best for trading as well.
And yourself too. Cheers, man.
Thank you. Thank you.